I'm Jono. 4 short-selling brokers, 1 investigation. Let's go.
4 brokers built for the hardest trade in the market. 1 has the deepest hard-to-borrow inventory with over 8,000 symbols and was acquired by a venture-backed firm with $465 million in funding. 1 was founded by a trader who spent years watching big firms fail short sellers and was fined twice by the financial industry regulator, including $200,000 for influencer marketing. 1 offers free commissions and no minimum deposit, and its co-founder was personally fined by the securities regulator for a misleading statement during the meme stock crisis. 1 has the cheapest per-share commission in the group, self-clearing infrastructure, 0 regulatory actions, and is 75% owned by a Korean insurance conglomerate. All 4 charge locate fees before you trade. All 4 earn whether your position profits or not. 4 fee structures, 4 regulatory histories, 4 ownership models, none built for beginners. The first broker was founded around 2012 near San Diego and acquired in July 2020 by a venture-backed prime brokerage technology firm with over $465 million in funding, over 8,000 symbols available to short, a locate system that activates at 4 in the morning, over 40 direct market access routes. The overnight multiplier roughly triples the borrowing cost per settlement day. The fee stack on a typical intraday short trade approaches 300 before profit or loss. The parent entity accumulated over $780,000 in regulatory fines before the acquisition. CenterPoint Securities itself has no direct enforcement actions. The deepest inventory in the market at the highest carry cost. The second broker was founded in 2004 in the Dallas area by a trader who worked at 2 major financial firms and experienced firsthand what they got wrong. Cobra Trading is privately held, founder-owned with no outside investment. The overnight borrowing rates are 20 to 50% lower than the first broker. On a single weekend position, the savings can reach 300 or more. The platform fee waiver threshold is lower. The inactivity fee is a fraction of the first broker's monthly charge. The customer service is faster and more personal, but the financial industry regulator fined the firm $150,000 in 2015 for anti-money laundering failures and $200,000 in 2024 for failing to supervise 17 influencers who drove 775 retail accounts. 2 enforcement actions in 20 years at a firm that has genuinely earned its reputation. The integrity was not applied equally to the marketing. The third broker was founded by 3 friends from Brooklyn who built and sold a brokerage to a specialist trading firm before launching a new one across 2 jurisdictions. TradeZero America offers free commissions on standard stocks, no minimum deposit, and no inactivity fee. The professional platform costs $59 a month, less than half what either specialist charges. In January 2021, the co-founder publicly stated the platform was not restricting meme stock trading, while a restriction was active. The securities regulator fined the firm $100,000 and the co-founder personally $25,000. 3 years later, the financial industry regulator fined the firm $250,000 for influencer supervision failures. 2 actions in 3 years. The most accessible entry point in the series with the worst regulatory record. The fourth broker is a division of a self-clearing firm founded around 2006 in New Jersey. Guardian Trading launched as the retail-facing brand around 2022. Self-clearing eliminates the third-party intermediary between the locate request and the securities lending desk. The base commission is a fraction of a penny per share, the cheapest in the series. The proprietary locate tool integrates with hotkeys in the professional trading software. In 2025, a Korean insurance conglomerate acquired 75% of the clearing firm. 0 enforcement actions against either the broker or its clearing parent. The cleanest regulatory record in the series. The smallest brand recognition of any platform in this comparison. And in the disclosure documents, the most transparent forced buy-in language, stating that positions may be bought in without notice when a clearing charge crosses $50,000. Every broker in this series earns from the same transaction. You borrow shares, sell them, and pay a daily rate for as long as you hold the position. The more volatile the stock, the higher the rate, the more the broker earns. The locate fee is charged the moment you accept, whether you execute or not. The overnight rate accrues across settlement days, including weekends. The platform fee applies whether you trade or not unless volume thresholds are met. The inactivity fee charges you for quiet months. The transfer out fee charges you for leaving. The fee structure at every specialist short-selling broker is designed to earn money whether your position profits or not. The differences are in degree. The first broker has the highest overnight multiplier, but the deepest inventory. The second broker has the lowest overnight rates, but smaller inventory on the scarcest names. The third broker eliminates commissions on standard stocks, but has smaller, hard-to-borrow inventory than either specialist. The fourth broker has the cheapest per-share commission with self-clearing infrastructure that should theoretically reduce locate fee spreads. The community consensus is that locate availability matters more than commission pricing. Having shares to borrow on a stock that is spiking is worth more than saving a fraction of a penny on execution. But for traders whose list of stocks to short falls within the inventory available at the lower-cost brokers, the savings are real money over a year of active trading. The regulatory records tell 4 different stories. The first broker has no direct enforcement actions, but inherited a parent entity fined over $780,000. The second broker was fined directly twice, totaling $350,000 for anti-money laundering failures and influencer supervision. The third broker has 2 actions in 3 years totaling $375,000, including a personal fine against the co-founder. The fourth broker has 0 enforcement actions against either the broker or its clearing parent. The cleanest record belongs to the least known platform. The worst record belongs to the most accessible. The ownership structures create different long-term risks. The first broker is backed by venture capital with investor return expectations. The second is founder-owned with no outside pressure. The third is bootstrapped by 3 Brooklyn veterans. The fourth is 75% owned by a Korean insurance conglomerate whose investment thesis centers on securities lending revenue. Each ownership model shapes what the broker prioritizes and how fee decisions are made over time. Venture capital needs growth. A founder needs clients. Bootstrapped founders need sustainability. A foreign institutional owner needs yield on a large asset pool. Which incentive structure serves the professional short seller best depends on whether you prioritize inventory depth, carry cost, accessibility, or regulatory transparency. CenterPoint Securities for anyone who needs the deepest, hard-to-borrow inventory available, where over 8,000 symbols, with 4 in the morning pre-market access, serve aggressive small-cap momentum, short sellers who close intraday and need the shares to be there when nothing else matters, accepting the highest overnight multiplier, a fee stack approaching 300 before profit or loss, and a parent entity fined over $780,000. Cobra trading for anyone who holds short positions, multiple days, and needs lower overnight rates with faster personal service, where a founder-owned private broker serves cost-sensitive professionals, accepting 2 direct enforcement actions totaling $350,000 across 20 years. TradeZero America for anyone who wants the most accessible entry point with no minimum deposit and free commissions, where a professional platform at less than half the specialist cost serves retail traders in liquid names, accepting that the co-founder was personally fined by the securities regulator and the firm was fined again 3 years later for influencer failures. Guardian trading for anyone who wants the cheapest per-share commission with self-clearing infrastructure and the cleanest regulatory record, where promotional locate pricing and hotkey integration serve mid-volume traders whose stocks are available within the inventory, accepting that 75% ownership by a Korean insurance conglomerate introduces priorities that may not align with professional short seller service. 4 brokers for 4 different obsessions about how to short the market. The fee structures earn before the trade starts. The question is, which trade-off you understood before you funded the account? Every choice is a trade-off. At least now you know what you're trading.